Selamat petang semua. Hi, good afternoon everybody. I think we've got Saudara Nick Ihsan Raja Abdullah, our chief chartist. I think we've seen some of his thoughts in the early mornings. I think I've invited him to see how we can probably go in terms of more of a relaxed kind of environment and chat about charts. I think he makan, tidur, bangun pagi, think of charts on something that we're calling a Maybank Kopitiam session. So Borak Bersama Maybank. This is our first kickoff for our audience, our investors out there. So just to kick off, today is Wednesday, the 15th of March. I think most important thing here, I think for the past week, we have seen over the weekend some sounds that we've heard about some banks in the US basically concerned with the closing of Silicon Valley Bank. We've also had of another two banks. Some of those fears have been allayed. I think the most important thing here is that I guess the US regulators, as well as concern about contagion, has been able to taking some lessons from 2008. I've been able to address that, and I think generally market is having a little bit of a fresh respite. That aside, we've fast forward to today. I think there has been pretty much Asian shares have actually rose, tracking a relief rally on Wall Street, as well as some US inflation data, which delivered no nasty surprises over the span of overnight. So coming back to the Silicon Valley collapse, there has been some talk about a possibility of a zero. Basically there's not going to be a rate hike next week when the Feds are going to convene for their meeting. Not sure what you're hearing, Nick. Any of your colleagues or any of your thoughts on that?
Actually, can be described as a blessing in disguise as well, because as per last week, we are talking that there's about 79% that Fed going to increase the interest rate about 50 basis point rather than early expectation at 25 basis point. So because what happened with SVB, higher rate hike could put more pressure on the bank and risking into what we call a raising concern over a systemic so-called collapse of the banking in US. So because of that, the significance of this so-called what we call that concern has decreased the expectation that the Fed going to put much more higher interest rate. And then in fact, if you look on the September Fed fund rate, it actually the probability of the rate cut is actually getting higher. So that actually very interesting. We can describe this as a blessing in disguise, because right now, despite a so-called concern that the collapse in bank could be similar in what happened in 2008, most of the market, I think global equity, if you take a look on the S&P last night, even our market right now is actually rebounded. I would say one thing, they are actually easing the so-called that kind of fear. While it's still early phase right now, whether we want to eye out the so-called concern about SVB collapse going to be turned into systemic risk or not. But as for now, those so-called bad news has appeared to be priced in. So that can be a so-called blessing in disguise, I think, particularly in today's market.
Okay. Well, I think it was probably something was unexpected. I think last week, I guess semua orang terkejut kan, and a bit surprised that this has come. And whoever has gone through the 2008 crisis would remember that it started with Lehman, and then it just there was a contagion after that. So there were some concerns, but let's track this. I think there are also some geopolitical concerns also today. Something about Russian drones, Russian aircraft hitting some drones and all that. So I think that will probably be in the news as well. Right. Well, I guess we're talking about charts here. I think that's why we are here this afternoon, sharing a coffee. So Nick, what are the indicators you're looking at? I think some of the overall trends that we said that would basically get our investors excited. I mean, any charts that you think that you want to highlight to us?
We did a write-up last Monday in our regional strategy update that we highlight the so-called a breakout in the VIX index. Let me show you. Right, so if you take a look at the VIX index, I'm using a specific 3-day chart, not weekly chart, not daily chart, but 3-day chart. One of the reasons because I found it 3-day chart for VIX, you have what we call that lesser noise and much more better in terms of how you want to do analysis on the chart kind of movement. So the significant this kind of movement because what you see is actually a solid breakout move in terms of the VIX index. So VIX index are known as a fear index. That means a higher or strong gain in VIX index will be an equal downturn in the equity market, particularly for S&P 500, which have so-called an inverse relation with the VIX index. So I mean, if VIX goes up, S&P 500 goes down. So one of the reasons why we use VIX as a barometer because the moment VIX start to spike, it tells us that we are entering a phase or a period where there are much more stronger volatility in the market that actually going to put the market more on the back pedal. So if you take a look at the reading for the VIX index, a solid breakout move last week has actually put VIX index into much more, I would say, a stronger territory. Hence the reason why you're seeing the reaction on the VIX index as well. Now, the thing is, one of the good thing about VIX is actually the moment you've seen a solid spike in VIX, then you know there are potential so-called reversal could occur on the equity market. That means at a certain point, when it hits certain point, you know, there could be so-called a bottom in terms of the equity market movement. So if you look at the chart for the past 2 years, VIX index has not ever been traded beyond 37 points. So I draw this so-called resistance over here, and you can see the resistance is pretty much strong, right within 34.5 up to 37.7 point for VIX. So this level has only been break once during October 20, and beyond that, the only time VIX goes beyond 40 point, 37 point, right within and at the peak of the COVID crisis back in March 2020, which, if you recall at the time, the S&P create so-called a reversal move at those level. So a peak in the VIX index actually can give us some indication whether the market downturn has ended up or not. As for now, there's a concern because we're talking about the banking system and so on. So the volatility appear to be on the high side. So because of this so-called higher volatility, we think there's a chance for the volatility to remain on the upside, at least on the near term. So that actually can put more pressure on the S&P 500. However, for the past few days, you can see the VIX index start to ease off again. But the trend structure for the VIX index appear to be on the upside. So I think while we can have a little bit relief for the recent rebound, but if you look on the volatility, it appears to be on the different kind of the level already. Previously on the sideways, now moving up, and we worried that this so-called volatility going to remain on the high side, at least for the next short term or medium term, perhaps for the next few months down the road.
Okay. Well, that basically tell how quite volatile the US market movements are.
Correct.
I mean, going by that, I guess we still have a respite in terms of direction. But how does this, as you put it, that VIX has a kind of correlation or inverse with the S&P? So how does that translate to your thoughts on the S&P 500? Is the index continuing to have a downward bias or not?
No, that's a concern because previously, if you look on the chart here for S&P 500, for the first time since January last year, the index has created a new high structure. That means it just break the so-called downtrend channel. However, the upside was pretty much kept within 4,200 region, and you can see the index coming back into what we call the so-called corrective move. I think this is in line with what we highlight during our market outlook session earlier, whereas we expect that it could be a correction move. The question right now, whether the correction going to be smaller or bigger. And as for now, as the current reaction, you can see the ongoing corrective move has appeared to be hitting some sort of the support right within at 3,800 region. Now, if you look the chart pattern for the past few days, 3 days in particular, you've seen a gap up movement last night. So these three candle often associate as a reversal kind of pattern. This is, we can consider this as a variation of the something that we call a morning star pattern, often coming as a bullish reversal signal. And this so-called movement was pretty much backed by higher trading volume. So because of that, I think short term we could have some sort of relief rally. Regardless the trend structure, I would say over the medium term, still pretty much on the sideways basis. Remember, as we highlighted VIX earlier, they mean the stock or the index right now is not really on the so-called stronger bullish mode yet, because we can see there's a plenty of resistance waiting to, you know, holding off the rally, whatever we've seen, at least in near term. But regardless, at least I think for those who are looking for short-term trading, current level could be seen as quite attractive, particularly for short-term trading, at least for the near term. So my expectation, if you look on the chart, there could be a rebound. But if the index unable to break at least the immediate resistance right within the so-called medium Bollinger Band here, or the 20-day basic 20-day moving average, you know the short-term bias is not going to be sustainable. But at least in the near term, we can expect some sort of the relief rebound in the near term.
Okay, I mean, if kita discuss this chart 2 days back, you will probably have a different mind lah, because that gap down is quite severe.
Scary.
It's just that today we see that, as you put it, the you know, the indicators of the gap up. But yeah, I hear you. I think that the trend is intact, but maybe it's just because of how how the regulators and how actually how HSBC is come into looking to save SVB Bank in the UK, at least in the UK, has given some respite in terms of, you know, coming back to that contagion. Okay, that's clear, and I think that will probably be giving us some of the flavor of what's happening in the US in terms of that. But I guess closer to home, dekat dengan kita punya own market, Bursa Malaysia, I think the next question for me, and also to our, you know, our audience and our investors down here, kena minum kopi lo ni, Kang, yeah, relax sikit. What do you think in terms of our local index, generally the MBM 30 KLCI, and some of on your thoughts on that? Because I think we've had some, you know, we've had pretty much all the information that we wanted from budget, from our recent, together with Bursa Malaysia, our Invest Malaysia that we you know, co-hosted with Bursa last week. We've got some, you know, kind of general some direction from the government and whatnot. Has that translated, and probably what the overall trend is for our KLCI index?
Oh, that is very tricky, because if you look on the KLCI, let me just open up. Right, I think the chart can tell you 1,000, worth 1,000 word, I would say. So this is the chart that we've been highlighting before in our Traders Almanac, in our market outlook, and so on. Whereas when we draw the chart over here, you can see the trend for 40 years has been quite sustainable. So what you've seen on the chart here is pretty much a simple mathematics over here, a linear regression channel for the KSCI uptrend for the past 40 years, since 1983. So we just draw a simple ±2 standard deviation and ±3 standard deviation. And for the past 40 years, this so-called deviation range has provided some sort of at least major support and resistance for the index. Now, the same reaction you've seen during the Asian financial crisis, 1998, the KSCI make a reversal move within -3 standard deviation. of this 40 years trend. And then since 2007, 2008, there's never been what we call the occasion where the KSCI close below -2 standard deviation. Even during global financial crisis, it just hit at -2. Even at during COVID low, we hitting at 1208. The index, while did briefly break this level, it was not close below. I mean, it just testing this level. And the same thing had occur as per last year, October, right within at -2 standard deviation at 1380 region. As for now, the reaction on the KSCI has been quite strong, the sell-off quite strong, but yet to break, or I would say breakout below at 1380. So I would say at 1380 is pretty much our I would consider as a last line of defense for now, in order for the long-term uptrend to be holding quite well. So the index need to trade above this level. So any valuation of this immediate level could actually, I would say, put the index into so-called pretty much uncharted territory, the one that we have not seen during the what we call that Asian financial crisis. So that's one of concern. So that means while I do think there's a valid reason for concern, the KLCCI chart right now appears still pretty much remain intact. Of course,
kejap. Ni, jangan bagi takut kita audience juga lah kan. I mean, this is you say uncharted territory. I just want to ask, maybe we are looking at trend signals. Do we have where volumes are supporting this movement ke tidak?
If you look the value and volume traded for the past week is not high versus the average for the past 2 weeks or 3 weeks or even month, but it's not at the level where historically higher than before. So that means all the selling pressure, I would say, in terms of the intensity, are pretty much lesser versus what happened during the COVID low 2020 or even during the global financial market. But we never know, because it could be a start for new down cycle. But as for now, as you see on the chart right now, the uptrend is still intact. I would say right within the critical support. So it's kind of tricky. So if you ask me, a Chartist, we are firm believer that the trend will remain intact until it broken. So yet to broken. So that means by right in terms of the what we call that trend, it's still long term. It's still pretty much uptrend. Long term, I mean, it's super long term. We looking at 40 years kind of trend. But if you look on the medium term, the KSCI is pretty much trading in the downtrend move since
there's a downward bias lah.
Downward bias in the short to medium term, super long term is still right with it at the key and support level. So I think if there any follow through selling pressure in the US market, if the thing with the SLB are not contagions, they mean if you look back in terms of our fundamental at this current level, the index could be trading at -2 10 of the what we call that of 5-year PE and so on. So in terms of valuation, it become quite attractive level. But again, when we talk about valuation can always go lower and lower and lower. But in order for the valuation to turn become much more attractive, it need to back by the momentum lah.
I understand. So I mean, again, long and short is that we have a downward bias in the short term to medium term, but generally we still have a very good trend line in the longer term. Correct. And volumes, I would say, not at its peak currently, but there is some intensity. So I think maybe a discussion later on, or we can pick it up, is whether or not these are redemptions or whether reduction in AUM, or this is also a reflection to, I guess, all the other ASEAN markets that we have currently anyway. Okay, never mind. I think we just need to move on from there. I guess we look at our general KLCI index as we discussed trend. Now, I think, I guess let's go to sectors. Which are the sectors which you think I guess if we see if there's any sustainable rebound in the coming days or weeks, so that we have a flavor on on where the direction might be. And coming back to your point tadi, you cakap Chartist look at trend is is quite I guess important in the scheme of things. I think there is a market saying they call it, the trend is your friend. So
Correct.
you tell me, my friend, what is the trend?
Now, that's a tricky part because trend is definitely down.
Kau ni semua tricky lah, bro. Just tell us.
Trend across the board is down. I think short-term rebound is possible because if you've seen the reaction across the sectors in that today, I would say most of them form bullish harami pattern. Bullish harami pattern mean we have a smaller bullish candle versus yesterday big bearish candle. So that mean this so-called harami pattern often need to validate by a stronger or bullish candle. I mean tomorrow going to be much more important whether that this rebound going to be sustained or not. Now, back to your question, if you look across the multiple sector, let's just quick look on the KSCI, mid cap and small cap. If you've seen the reaction even on the mid cap, the FVM 70 FVM 70 index is actually appeared to be trading on the so-called support level. You recall here, this is the critical so-called resistance turning into a support level, and it occur right within a 200-day moving average. So because of that, I do think that mid cap and even a small cap here could be have a what we call that a stronger possibility for the rebound versus the big cap. But again, the reaction here need to be followed by a stronger candlestick, particularly tomorrow. Today is 15. So on the sector wise, I think I'm looking at construction, consumer, utilities, and I think another one would be property. Four sector that look right now appear to be holding quite well in terms of the absorbing current selling pressure. Construction appear to still trading above 200-day moving average. There's a significant slightly rebound right within a major resistance turning into support, sub at 157 point. For consumer, it's not consumer. Consumer trade way below the 200-day moving average, but transportation and utility doing far more better. I think utility wise, you can see here, one of the reasons why utilities are often associated with the defensive kind of sector. So in terms of how the market reaction or dynamic change right now, I think it makes sense that utility is become your go-to kind of sector, particularly when you want to have more defensive nature in your portfolio. So you can see here resistance turning in support right within 880 point. There's a significant bullish reversal right within a 50-day moving average, telling you that utilities index still trading on the uptrend, at least in the medium term. While the transportation, I think is still far off within the 200-day moving average, despite trading below 50-day moving average. But in terms of the trend structure, it does look like quite promising versus the other sector. If you look the rest of sector, pretty much create a stronger or weaker lower low structure. So if you want to look on this, I think sector wise, I think construction, utility and transportation provide at least much more better prospect against the other sector as we seen as for now.
Okay. Seems that again, a generalization that there is a concern. I think maybe the trend is probably on a downward bias. Probably be also looking at I think our first quarter is halfway through, and then we're going to the second quarter as well. All right. I think we'll probably be at the end of our Borak session. So thank you, Nick. I think we'll probably continue with our conversations and dialogue or chats with some of your chats. Looking forward to doing this soon again. And to everyone, our investors, our our audience, you can get our latest market news and research from our Telegram channel, Trade with Maybank. Also, if you have any questions, if you would like to trade and probably discuss further, do reach out to your respective sales representative, as well as through our digital sales channel. Okay, with that, remember, stay ahead, trade smart, and thank you for joining us. Thank you, everyone.
Do 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 do.